Have you ever wondered why some businesses collapse even when sales look good and profits seem fine? The truth is, most business failures don't start with bad products. They start with bad money habits. Maybe it's overspending, ignoring small leaks, or chasing the wrong financial goals. The confusion grows when these habits look harmless in the beginning but silently drain your company's strength. In this video, you will learn 8 money habits that will make your business bankrupt. So, learn and avoid these mistakes in your business journey. Habit number 1, mixing personal and business money. Using one account for both business and personal expenses creates chaos. It blurs your financial picture and makes it impossible to track cash flow accurately. You might end up spending company funds on personal needs without realizing the long-term impact. This mistake also complicates tax filing and damages your credibility with investors or lenders. Always separate accounts to stay disciplined and clear. Habit number 2, ignoring cash flow management. Profit on paper means nothing if your cash isn't flowing. Many businesses die while waiting for payments or running short on liquidity. Without tracking incoming and outgoing cash, you can't plan for payroll, inventory, or marketing. Regularly review your cash flow statements and keep a buffer for emergencies. Healthy cash flow is the heartbeat of a business. Habit number 3, overspending on growth. Scaling too fast can backfire. Entrepreneurs often believe that expanding means success, but without stable cash reserves, growth becomes a burden. Expensive office spaces, extra staff, or unnecessary tools can quickly drain profits. Before scaling, test your model, secure consistent revenue streams, and focus on sustainable growth, not just speed. Habit number 4, ignoring budget discipline. A business without a budget is like driving without a map. Overspending in marketing, travel, or luxury upgrades without planned limits can cripple operations. Budgeting isn't about restriction, it's about direction. Review your monthly expenses, set financial goals, and track them regularly. Every dollar needs a purpose. Habit number 5, avoiding financial reports. Many small business owners skip reviewing profit and loss statements, thinking it's a finance department job. This habit hides serious red flags. Without regular financial analysis, you'll miss trends, rising costs, or declining margins. Reviewing your reports monthly gives you control, foresight, and the ability to make better decisions. Habit number 6, relying too much on credit. Credit can be useful, but overdependence turns into a trap. Constantly using credit cards or loans to cover daily expenses leads to mounting interest and stress. Instead, use credit strategically for growth opportunities, not survival. Build a reserve fund and monitor debt ratios to stay financially healthy. Habit number 7, neglecting taxes and compliance. Ignoring taxes, delaying filings, or missing compliance deadlines can result in heavy penalties. Many businesses lose more money in fines than in bad deals. Stay proactive, hire a good accountant, automate reminders, and keep records organized. Financial discipline also builds trust with partners and government agencies. And habit number 8, underpricing your products or services. Trying to attract customers by offering the lowest price may seem smart, but it's dangerous. You train your audience to undervalue your work and leave no room for profit. Over time, low pricing suffocates your business. Focus on delivering value, not discounts. Strong pricing comes from confidence and clarity in your offering. Most businesses don't fail overnight. They collapse slowly because of unnoticed money habits. Audit your finances today, correct what's draining your strength, and build a business that thrives for years. If you found this video helpful, like, share, and subscribe for more financial wisdom that keeps your business strong.